Let me ask you something. Have you ever heard of the alternative minimum tax? Most people haven't, or if they have, they will shut it up thinking that's for the future rich, not me. But here's the thing, AMT had the sneaky way of showing up when you least expected it. I have seen regular families, not millionaires, blindsided by it. People who thought they were playing by the rules only to have their eyes quietly pull the rug out. That's why this new tax law matters. The big beautiful tax bill that was passed in July 2025 just reshaped how AMT works. And even if you have never paid it before, you want to understand the changes, because knowing how AMT works can save you thousands and keep you from nasty surprises. Now let me tell you a story. A couple I will call Alex and Jordan came into my office earlier this year. They earn about $420,000 combined. They live in a high tax state and have 2 kids. They were worried because in 2022 they had to pay AMT out of nowhere. It wiped out the refund they were expecting. Fast forward to 2025 and I ran the numbers under the new law. With the permanent higher exemption, AMT wasn't even close to triggering. So that's peace of mind, and it's the kind of planning that changes how you live. So here's the big shift. With the new law, AMT exemption was lower and fade out slowly. That's what dragged a lot of middle and upper middle income families into AMT. Starting in 2026, the exemptions is still higher, so it locked in permanently, but the phase out happens sooner for really high income and it disappears faster. So for most people, especially household under about $500,000 on a single or $1 million joint, you are safe. But if you are above that range, you still need to pay attention because the AMT can come roaring back quickly. Let's put this into real life. So I will change the names, but these are real clients. Let's look at case number 1. Priya is a single professional earning $250,000. She works at a tech company and have incentive stock options. So 1 year she exercised a big chunk all at once, thinking she was smart to get in early, but that $150,000 spread pushed her into AMT, and she owed tens of thousands more than she expected. So we worked with her to spread the exercises over a couple of years. With the higher AMT exemption now permanent, she has more breathing room, but we still map every exercise against her income. So it's not about guessing, it's about running projections, so you are never surprised. Let's look at case number 2, the Roths. So they are married with $1.5 million income between business income and investment. So for them, the AMT is still very real. With the new law, their exemption started phasing out earlier and it disappeared faster. We had to adjust how they time capital gains and charitable giving. So instead of lumping everything into 1 year, we smoothed it across multiple years. So that one tweak alone saved her over 6 figures. Now, why should you care if you are not making $1 million? Because AMT planning intersects with the strategy everyone should be looking at, like Roth conversions and timing when you sell investment, deciding whether to exercise stock options, even how and when you pay your property tax bill. So these moves can either trigger AMT or keep you clear of it. For example, I had a client, let's call her Melissa, who wanted to do a big Roth conversion. She was terrified of triggering AMT, but when we ran the numbers, the AMT wasn't even close under the new law. She converted $100K into Roth, locked in tax at today's rates, and know that money will grow tax-free forever. If she hadn't asked, she might have waited and missed that window. So here how I frame it when talking to clients. So first run the number side by side. So regular tax versus AMT, don't guess it. If you got ISOs, capital gains or high SOT deductions, this is a must. Second, spread out big moves. You want to exercise some option now, some in next year, and spread out charitable gifts or use a donor advised fund to control the timing. Third, use AMT safe year to your advantage. If you know AMT isn't binding, that's a great time to do a Roth conversion, realized gain or a bunch deduction. And don't forget the AMT credit. If you ever pay AMT in the past, you might have a credit you can use in future years when your regular tax is higher. So I can't tell you how many times I have seen clients leave money on the table because they didn't track the credit. Here's the real takeaway. Most family in that 200K to 600K range professionals or business owners or landlords are probably safer now than they have ever been. The new law gives you more protection, even if you are north of the threshold or if you have stock options. AMT is still on the table. And even if you are not having a direct hit, planning with AMT in mind can open doors. So more on tax conversion, more efficient giving, and smarter timing of deductions. I will leave you with this. So don't just assume AMT is something you will never face, and don't assume it's gone for good. It's not. But for the new law, you have got more control than ever if you plan. So think about your situation. Have you ever been hit by AMT before? Or you worry about it when exercising stock options or making a big move? Drop a yes or no in the comments. I would love to see how many of you this really touches. And if you have got questions about whether AMT planning makes sense for you, you want to run the number now. It could be the difference between a nasty surprise and a tax season that feels under control. Thank you for watching. I'm Mia. Aloha.